So this week's program highlight is the ODVA program. It's the VA program subsidized by the state. It's different than the federal VA program in several different ways, and we're kind of going to go over some of the highlights in this video. So the first thing to know is it's actually a conventional loan. So it's underwritten to meet Fannie Mae's guideline requirements. So the down payment of 5% is a requirement. The property types and ages are the same as Fannie Mae. How they look at income, work history, significant derogatory items like bankruptcies and stuff. All of this has to meet the conventional Fannie Mae program requirement, which is typically more restrictive than what the federal VA program might be. Another big notable one would be the debt to income ratio. It has to qualify through Fannie Mae, which on the federal program, with enough residual income, I've seen debt ratios go as high as 69% and still get approval. You won't get that on the ODVA program. So again, this is a program that meets Fannie Mae's requirements. It's actually held by the states, the states who services that loan. And so it always stays with Oregon. And some of the big highlights, or one of the biggest highlights I think about this program, is the interest rate. So right now, as I'm making this video, the federal VA loan is probably around 7 to 7.25%, and probably has a little bit of a discount fee, depending on what your credit score is and the property type. On this program, though, there's really only two rates. It's set by the state, so credit score is not impacting it. It's a 6% at par as of today. And again, attached to this email is the flyer for you to look at. And then you have the option to buy the rate down to 5.75% at a cost of 1.375. But those are the only two rates that are available. So it's a nice rate. However, because it is a conventional loan, unlike the federal, if you're not putting 20% down, you will need mortgage insurance. And so lower credit scores impact the cost of that mortgage insurance. And so you want to really take a look at not just the interest rate, but what's the interest rate plus that mortgage insurance, and how does that balance out? So the other benefit of this program is if the veteran has already used their VA program before and they're looking to put like only 5% down, the federal VA is going to charge a VA funding fee unless you have at least 10% disability or not. On the conventional program, you don't have that fee, so that's a bit of a savings as well. Or perhaps you currently own a VA program, a loan, and you're looking to purchase another property. It might be that the ODVA is a good secondary loan. Though I do want to know, it is possible to have two federal VA loans at the same time. Another big difference between this program would be on the federal VA loan program. If you have your full benefit available, so it's not tied against another property, you could actually purchase like a $1.5 million home and have no money down. On the ODVA, because it is a conventional program, essentially, you have to have at least 5% down, and your max loan amount is tied to the max conforming loan limit at the time you're doing the loan. So those are some differences there. It is an excellent program. As you'll see, the interest rate is very much an attractive option for a lot of borrowers. And so it's something to have a conversation with your clients. Now, a lot of lenders who offer the federal VA loan do not offer the ODVA loan. So they do need to be somebody who's set up at the state to offer that program. But again, if you or your clients have questions on this program, is this a good fit for them? I'd be more than happy to dig into the finer details for you at that point. So until next time, have a fantastic week. All right.